Hey, good afternoon. It is Wednesday, the 26th, August 26th. I wanted to talk to you guys about how commissions work in life insurance. Some of you guys know how it works. The new agents, I'm kind of making this video for new agents or people that are thinking about becoming life insurance agents. So, what I'm going to do is kind of show you an illustration of how this works. Basically, we work on commission. What the insurance company does is they pay us in advance. You can get paid as earned, but most people would like the advance because it's more money. If you are buying leads or have other expenses involving your business, it's good to have that upfront money. So just to kind of show you how that works, I'm going to do easy math. Let's say you sell a policy that's $100 a month. You're an insurance agent. You just wrote up a person, and it's $100 a month. What the insurance company is going to do is they're going to, let's say you're on 100% commission. So 100% commission, and it's $100 a month. It's going to look something like that. 100% commission, $100 a month, times 12. If they were to pay the whole entire year, it would be times 12. 12 months, it equals $1,200. Now, if you're at 100% commission, that means your commission would be $1,200. But what they do is they pay you 9 months up front. So that would be 75% of that. So with that being said, if you get 9 months up front, I'll show you how that works. You take 1,200, and you can do it two ways. You can do times 75%, or you can divide it by 12, subtract 3 months. A lot more math involved there. So basically, 9 months, they're going to advance you $900. So you still get the remaining $300. I'm sitting here writing and not showing you. So you would get an advance of $900. You sell one policy, $100 a month, 100% commission, equals $1,200. They're going to give you 9 months up front. That's $900. Not a bad deal, right? And then you'll get the additional $300. The additional $300 on months 10, 11, and 12. So that's one policy. So, right, 1 or 2 policies a week, that's not a bad gig, right? And then these are what I call trailers. These are paid as earned, the rest of your money that comes in on months 10, 11, and 12. So if you've been selling policies throughout time, of course, months 10, 11, 12, 13, 14, 15, and so on, you'll be getting, these extra checks coming in. Now, this is basically the first year off of a single policy, off of one client, right? So if you've got multiple clients, multiple policies, this is happening multiple times. So as you can see, you can make pretty good money at this. Now, what's going to happen is if this stays on the books past year one, years 1 through 6, you're going to get paid another percentage off of all these policies that you've written. Depending on the carrier, that could be anywhere from 6 to 10% all over again, years 1 through 6. Or I say 1 through 6, years 2 through 6. Like year number 2, you're going to get more money off those policies that stayed on the books. Year 3, year 4, year 5. Now, so you usually get up to year 10 and additional residual income off these policies you've been writing. So as you can see, writing whole life insurance, this is how this works. You're going to get the extra residual money. Now, a lot of times when you do term products, you'll get an upfront money like this, but there won't be any residuals on the yearly renewals after that. Most term products don't give you residuals. So usually whole life does. So that's kind of the lesson on how the commission structure works. Now, the bad thing about life insurance is what they call chargebacks. And so, I want to give you the good and the bad. So this is the good, right? Well, there's also some bad. Now, this is the bad. Let's say you have somebody that doesn't pay. They decide they don't want it anymore. They cancel. Something like that happens. So now that policy is canceled. Well, they didn't keep it the whole year. And in this loan agreement, basically, the agreement is that they pay for the whole year, 12 months. Your safety net is 9 months. They just have to stay on the books 9 months because that's what you're getting advanced. So once you're past the 9 months, you're gravy. Now, let's say they cancel. Say they've paid on it, say 2 months. So you would subtract 2 months from 9, right? That's 7 months that you owe for, basically. They paid 2 months, and they didn't pay the other 7 months, the full 9 months. So now you owe the insurance company back for that advance. Now, if somebody cancels, you have the opportunity to save it, or if they change bank accounts, that might be another reason that the payment doesn't get made and it's a possibility of lapsing. Well, you would call your client, say, hey, this is Richard. I'm your insurance agent. Remember me, whatever. And then you say, hey, what happened with your payment? It looks like, August payment wasn't made. Did you change banks? Were there some changes I need to know about so we can get this fixed so you don't lose this coverage, this great coverage you have? Well, it might be something simple like a bank account. Oh, yeah, I changed the bank account. I had some identity theft or something like that. And then you just get the new information and they rock on. You can do a 3-way call with a lot of times with the carrier and get all that fixed. And then there's not any problems, no chargebacks. Now, in the event that they do want to cancel and you can try to save it and say, well, what's the problem? Is it you just can't afford that $100 a month? Is there something that we, maybe we can, see if we can get you a reduced rate? If we could get that down to $80 or $75, would that help? And then you start working on that angle to try to see if you can lower the payment for them, and you can usually save the policy by doing that. And there's a little bit of paperwork there, but you can save it by just reducing the amount for them. Now, if all that fails and it is a cancel, there's not much you can do. It's a cancel. So let's say they paid 2 months. So they've paid $200 into it, and they advanced you 9 months. So you owe the company back 7 months, which, easy math. Let's see, canceled. So that's called a chargeback, right? So if it's, that 7 months advance, you might be owing the insurance company $700. Big deal. Don't freak out. If you're out there writing business, this doesn't matter, because you're going to keep writing business, and that's going to be cushion for that. You're not going to even notice that. And don't feel like they're taking money out of your pocket. The client just didn't fulfill the contract. They didn't pay their payments. So, they gave you a loan. They're basically loaning you the money. They're just giving you the upfront money for the whole year. So, that's called a chargeback. Now, some people will set aside a percentage of their money that they make on each policy. They'll set that over in a side account, and like 10%, something like that. So if there's ever a chargeback, you've got that cushion, and then you can just either pay that or just write just write some more business, and that goes away anyway. It's a wash. It's a washout. So chargebacks, they sound scary, but it's just part of it, and there's nothing to worry about. Knock on wood, I don't have a lot of those. It's the way I do business, and I can help you guys close your deals and concrete that sale so that you can avoid a lot of this. And I can do some training on that as well a little later on to kind of help with these. But I don't get much of these, like I said, knock on wood. So anyway, so that's how chargebacks works. Now, if you're scared of those and you just want to be paid as earned, you can do that. And what that is as you're writing business, you just get paid for that for the month. Each month you get paid. And then you'll never, ever, ever, ever have to worry about chargebacks ever, because you're just getting paid on that payment that they made. And you can do that on all your business if you want. I don't do that though. I want the money up front. I like those big checks, those big deposits, and I just keep writing business. So anyway, guys, that's the little lesson on commissions and how they work in insurance. If you have any questions, reach out to me, 501-547-9230, 904-454-0319. Those are two phone numbers you can text or call. allsaintsfinancial@gmail.com. You can email me there with any questions, concerns, complaints. Anyway, or hit me up on the Crew app. But that's how the commissions work, and wanted to just kind of go over that for the new people and for anybody that didn't understand. All right, guys, get out there and kill it today. Tonight I'm dialing for dollars. I'm going to book some appointments for the next 2 days. Oh, an announcement. I'm going to sign some lease papers. I just got me an office here in Hot Springs. Excited. All right, talk to you guys later. Bye.